So now that we've got the view set up in the proper perspective, again, for my favorite intraday time frames, 1530, 6240, all set within their market memory. They all have the 34 EMA wave on there, and actually also have the overlay of the chart pattern. So all those lines and levels you see on the chart, these are automated, and they are all the chart pattern alerts that would be, say, the last completed and the last emerging patterns. For anyone using PRS right now, this is just a PRS overlaid right on top of your IBFX4 charts. It's very cool. By the way, outside of the 34 EMA moving averages, this white line you see going across here, and I don't actually need it, but it's just nice to know, that's the 200 period simple. Okay, that is the 200 period simple moving average. And the reason I put that on the chart is it does have a certain amount of psychological relevance. It's a very popular moving average, and just the fact that a lot of people watch it turns it into an important support and resistance levels, kind of like big figures or psychological levels. You know, people watch those big figure levels. They watch the double zeros. They watch psychological levels like the 50, the 20, the 80 pip, and they become then support and resistance. All right, so what we want to do now is quickly define what swing trading is, because in my experience there's a lot of different definitions of swing trading. I'm not here to say somebody's wrong. I'm not here to say somebody's right. I'm going to teach you the way I do it, and the way I do it we have to at least agree upon what it means to swing trade. A swing to me is a pullback or a correction or a bounce. So what that means is when we're looking at a market and there's a correction, whether that means a bounce in a downtrend or a pullback in an uptrend, that to me is a swing. Swing trading has nothing to do with any kind of time-based definition. In other words, I do not actually subscribe to the belief that a swing trade is a trade that goes 3 to 5 days. That's not the way I view swing trades. I view swing trades by the actual movement of price action, not some sort of duration. So for our purposes here, swing trading will be trying to find those corrections, those pullbacks in an uptrending market, those bounces in a downtrending market. That means that the first objective in swing trading is identify a trending market. And that's the easiest way to do that is to have the market memory already on your charts with the wave already overlaid on your charts. And once you have the wave, the 34 EMA on the high, the low, the close, and your market memory, then it's just a matter of looking at the angle at which these lines are moving. Okay? That's all it is at that point. So if I were to look at the 1530, 6240 right now, which one of these time frames has a 12 to 2 or 4 to 6 o'clock angle on these three lines? I would say probably our best example would be this 60-minute Euro-US dollar. This chart down here in the lower left-hand corner. That'd probably be our best example so far of what I'd call at least close to a decent 4 to 6 o'clock downtrending market. Now again, this trend reading using the wave must be done within that market memory, within that market look back. So when I'm focusing in on this particular chart, the main reason I focused in on it is the angle of these three lines. What about this particular chart, the 240 here in the lower right hand corner? This 240 has been moving up at 12 to 2, but you'll notice most recently it's flattened out. The waves have kind of hooked, moved, and they're starting to move sideways and flattened out. So currently the only chart that's really moving up or down at a trending angle would have to be the 1 hour chart. Now this is what I call triage. Triage is that process by which I compare the time frames that I watch in a particular pair and then determine what the market cycle is. So because we're looking for swing trades here, because I'm looking for that trend following opportunity, I'm focused in on either that 12 to 2 or that 4 to 6 o'clock market cycle. And when I say 12 to 2, 4 to 6, I'm literally talking about the angles that you would see on a clock or on your watch. Literally imagine what 12 and 2 o'clock are in terms of an angle, or what 4 and 6 o'clock are in terms of an angle. If you combine the wave with this idea of a market memory or market look back, it will keep you able to consistently, and I think confidently, dare I say, assess what the market direction is. And this idea, again, of market cycles is pure Dow theory. Pure Charles Dow 101, his idea of market trends. My only gripe was I couldn't find a way that anybody taught how to recognize these trends and shifts in the trends in real time without having to draw what is incredibly lagging, like an uptrend line or a downtrend line, or waiting for certain moving averages to cross. Okay, again, which was also very lagging. I wanted something that was a little bit more visual and something that was going to be a little bit more adaptive. In other words, I wanted to see not just whether it was an uptrend or downtrend, but the strength of it. And that's where these 34-period exponential moving averages became really probably my most powerful set of tools, because without knowing the underlying market direction, there's no way I can reach into my trading toolbox and grab the right tools, the right indicators, and the right strategy to apply to that time frame, to that pair. I don't apply a strategy because that's the strategy that I want to use. I apply a strategy to the market based upon what the market is telling me its behavior is. Okay? So with all that in mind, the triage process is probably the most important. Again, it's the same process I would be going through if I was looking for a momentum trade, if I was looking for a swing trade, whatever it is. Now, we'll be covering sideways markets next week. Today's all about trending markets, so that's why my focus is there. If this were like if this was me sitting in my office looking for trading opportunities, I'd be looking for whatever the market's mood was, and I'd adapt to it and determine what the set of tools and approach would be. Again, because our focus is on the trending markets, that's what we're gonna continue to look for and try to take advantage of. So let's go ahead and zoom in on this 60-minute Euro US dollar. Since it's larger now, we can zoom in a little bit and still maintain our market memory of the 2 weeks for this particular time frame. Okay, so what we'll do now is we'll go ahead and segue into how do you set a swing trade up.